Welcome to your Daily Five. We have two guest hosts for this episode, Roman Bogomazov and myself, Bruce Fraser. Roman, welcome to your Daily Five.
Well, thank you, Bruce, and I'm really happy to be here.
Wonderful. Well, let's get started. Two really quick announcements. Roman is beginning his Wyckoff trading course teaching cycle beginning this fall with part one, part two, and then he and I do together the Wyckoff market discussions every Wednesday. The first episodes or the first classes for the Wyckoff trading course and Wyckoff market discussion are all complimentary. Go to wyckoffanalytics.com to learn more and to sign up. The other thing is the TSAA-SF is having their annual conference on September 12th, an incredible lineup of speakers for the 50th year anniversary program. This year, for the first time, it's going to be virtual via Zoom. Members attend for free. Guests can attend for a nominal charge, but become a member. Look at this incredible lineup of speakers. John Bollinger, Linda Raschke, Arthur Hill, Martin Pring, Joe Turner, Craig Johnson, our own Roman Bogomazov, Richard Ross, and Akshay Chinchikar. So please have a look, and we will love to see you there for this all-day conference. Roman, what are we going to discuss today?
Well, commodities are a very interesting space right now, and I think that going forward in the next year or so, or even more, we're going to be talking about commodities a lot. And you and I, we've talked about those during the WMD, and today we want to look into two major commodity spaces. One is natural gas, and Bruce, look at this formation here. Look at this structure. This is exactly what us Wyckoffans look for. Trading range that starts having some kind of bullish activities within it, and then a bunch of confirmations on the way out. So I would say that we've experienced at the end of June a spring action with the higher low test, and we could call that test LPS, last point of support. And now this latest rally that overcomes the resistance cluster is confirming the bullish outlook. It's also being confirmed by the increase in the volume signature. And we're using a continuous contract right here. So you will have to think about, how to trade this theme. But very interesting bullish development, Bruce, in natural gas. And we've been talking about it since the end of July. So what are your thoughts on the continuation of this trade?
Well, the classic concept of absorption, where an asset is being systematically absorbed by strong hands, and it demonstrates this absorption being near completion in the way that it trades as it goes from what we call phase C into phase D, which is the markup phase. And so too much to discuss point and figure charting today, but this would be a classic example of accumulation that could be charted and calculating a price objective with a point and figure chart.
Excellent. All right. Well, the next theme that we have is the agricultural commodities, and those are extremely interesting as well. And we're looking at the DBA. This is the ETF, agricultural ETF. Again, you have to double check how to trade, this specific theme. But again, Bruce, kind of the same story. The trading range that we see, the consolidation, we also see that the lowest low came as a spring also in phase C, and now we are in potential phase D. So both natural gas and DBE are in the same type of structural spot. I also like the whole volume signature where that volume increases as the price is starting to make higher highs, higher lows. Just the overall look of this formation looks very interesting because the volatility went down drastically, and we're seeing that in the spread and in the swing price action. Bruce?
Notice the classic acceleration into a climactic low and then a series of tests, and that climax sets up the beginning of the accumulation phase. And so this definitely has incredible promise because the long-term downtrend is being climaxed, and then there's an accumulation area that has been created with a lot of volume that's come in. And look at this striding downtrending channel that has been overthrown at the lows, which is called a classic oversold condition. So this is just a classic case. And we're not necessarily recommending trading commodities. Matter of fact, we're not recommending anything. These are just case studies, proof of concept of the Wyckoff methodology that we want to share with you. Commodity traders have unique skill sets, and everybody should be careful in any asset that they trade. So anyway, what else do we have today, Roman?
All right. Well, in the agricultural space, let's look at different, softs and grains. Soybeans, and this is a continuous contract as well. So again, you'll have to think about how to trade that to find the specific vehicle. But look at this latest trading range that has spread throughout the last two and a half years. And what we're seeing after the low in 2019, a higher low in 2020, and then a series of local higher lows, which is great, a higher high. So structurally, we are making the stride to go up, and we're looking for the continuation of the rally into the highs of the resistance cluster between 940 and 960. So it looks very positive, Bruce, and has a very nice causality.
And of course, the mastery concept in Wyckoff is being able to identify the conclusion or near conclusion of accumulation or distribution and the beginning of an important markup that can be campaigned for a major trend. And so this is really the work that's to be done, and this is what Roman teaches in his Wyckoff trading method classes.
All right, let's look at some other commodities here. Wheat also has the same type of look, the same type of structure where we have a trading range that lasted for quite a lot of time. And the more causality we have, the better. And we kind of seeing how the volume was increasing, and now the volume is actually at the lower level as the price starts making higher lows. So this is a very interesting bullish development. Bruce?
Typically call that a hinge, where you have this convergence of downtrend and uptrend into an important moment on the chart that resolves itself either into a new uptrend or downtrend. So this is resolving itself into a most interesting place. We have time for one more, Roman.
All right, let's look at sugar, and this is a weekly chart. Again, we are looking for the formations where we have consolidations, trading ranges. This is a very interesting decline because it has that fear characteristics built in with the increased supply signature and with the increased spread. And now look at the recovery of it. So a very bullish recovery, Bruce.
Terrific. Well, Roman, we're just about out of time. Any final thoughts?
I would say that, all of the instruments that we've shown here, just make sure that you understand how to trade them and what trading vehicle to pick.
Terrific, Roman. Thank you so much, and we'll see you again next time.
Sounds great.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.